Where are opportunities for you in your field right now? When you look out there, where do you say that's a business opportunity for me? You go first.
The business opportunities for us are in different industries. We are predominantly, first and foremost, we provide data and analytics and information to the financial vertical, if you will. So the opportunities for us are to expand that and to go into different industries and verticals, law and government and education. So
opinion as well, right?
We've done that. That is no longer. It's not clear that opinion makes you an awful lot of money, by the way. Opinion
depends on what opinions you have.
Opinion gives you a access and allows everybody in the world to understand what your opinion is, whoever you are, a company or a human being. And so, you know, industry verticals is clearly an opportunity for us, and we're trying to explore a number of different industry verticals where we can take the same skill set and experience that we applied in finance and apply them to other industries. And clearly, geography. And Asia is a phenomenal opportunity for us. Unfortunately, even though I'm European, I suspect Europe is not much of an opportunity. Mm-hmm. And I don't think the US is much of an opportunity. But Asia clearly represents enormous potential growth for us, different industries. And also, by the way, different asset classes that we haven't absolutely perfected in our business, one of them being foreign exchange, loans, those sorts of things, where we could do a better job and sell more terminals. So there's lots of upside, we hope and we think.
We'll come back to the geographic part of this because there's a whole conversation to be had about developing economies in the spirit of innovation. But Chris Liddell, let me ask you the same question. Areas of opportunity for large companies like the one you were helping to run just months ago.
Sure, if I talk to General Motors and also Microsoft, which is where I was previously, and interesting, even though they're totally different industries, the opportunity set is actually very similar, which is fairly obvious geographic. So as Louise said yesterday, I mean, in the US, we represent 5% of the global population. We might represent 25% or thereabouts of the global GDP, but that's going to change over the next decade or so. So for large multinational companies like Microsoft, International Paper, who I worked for before that, and General Motors, the geographic opportunities are huge. And then you overlay on that product opportunities. So interestingly, again, even though the industries are totally different from each other, the product cadence is quite similar. A new car is about a 3 to 5 year introduction and development cycle, same for operating systems. So over the next, say, 10 years, you're probably going to have 2 iterations of product cycle. In the automobile industry, electrification of the car is a huge theme and a huge opportunity. General Motors actually just announced today a development center in China, which is going to see itself and putting itself out as the leader in electrification of the car over the next 10 to 20 years.
Let me pick up on something you said, the cadence of product development, and turn it sideways a little bit. Talk to me about the pace of innovation. How important is innovating quickly as opposed to innovating the right way?
Well, I've worked most of my life in large companies. I think large companies are interesting in that they're different from small in a lot of obvious ways, but one of them is they were successful for some reason, otherwise they wouldn't have been large. So their challenge is how do you perpetuate and replicate that success as opposed to build on the initial success that you might have had. And the 3 areas that are incredibly important, and I'll get to answer your question, but I'll put a bit of context around it, is 3 critical things that large companies need to be. First, globally competitive on a cost structure basis, so that's table stakes. But these days you can choose where you sit inside the cost curve from basic product to service. So you can produce your high value parts of your equipment in the US and low value in other industries. But lowering your cost base and being globally competitive against people who are in China is absolutely critical. So that's table stakes. Second on top of that is innovation, to get more to your question. And systematic innovation is critical inside large companies. And I use that word systematic because it needs to be more than just someone having a great idea in a back room. And systematic innovation in large companies, if they're successful, happens in 2 ways. One, external innovation, So innovating in product offerings to companies. So it's critical, obviously, for General Motors that they come out with the Volt and that they come out with another offering that's even better next time round. But then also systematic innovation is internal as well. How do you have a differentiated business model that allows you to be smarter in the way that you process things relative to someone else? And the third challenge for large companies is the hardest of them all, but the most important, which is cultural. And that's to be what I describe as adaptive. And that reflects the fact that large companies are just like anything else. They're human organizations, and they're driven by the laws of nature. So you have to look at concepts like anthropology and biology and chemistry. And we don't have a lot of time today, so I won't go into it. But simple things like look at the Mongol Empire, which lasted 5 times longer than any large corporation. Look at some of the principles about how they ran themselves. They had all of their talented people on the outskirts, not at the center. We do exactly the opposite in most major corporations. We have our talented people in the headquarters. Most successful large human organizations have their talent on the outskirts, which is where most of the interesting things happen.
Actually functioning and doing things, right?
Functioning, doing things, and with a significant amount of decision-making power. High surface area, low bulk. Organisms that are successful over time and adapt have a high surface area, low bulk. So most of our large organizations are exactly the opposite as well. They have high central functions, low outskirts. So getting rid of processes, getting rid of unnecessary waste, in particular at the center, and pushing those resources out to the end, getting rid of corporate processes and investing in R&D is incredibly important. And then I talk about this concept of disequilibrium, targeted disequilibrium. Most organisms that are successful over successive generations don't live in a state of equilibrium. And so you need an organization that's adaptive in its organizational design and has a number of targeted ways in which you disrupt the organization in a systematic way, which allows it to reform and rebuild around the opportunities. Yeah. So a long answer to a short question, but all of those things are critical to big companies.
Interesting point about organism. We'll get back to that in a minute. But Joe Aiello, I want to give you a whack at this question of opportunity for you in the infrastructure space and in the funding space.
Sure. Just to put it in perspective, we're a relatively young, smallish company. We've got about $2 billion plus of equity to allocate to the market in OECD countries. That's what we're restricted to. And as odd as this may sound, the US is our best market for that, in part because we were one of the few that understood where taxation policy was going and therefore what the drive for financing infrastructure was going to be. So our expectation is 40% to 50% of our business in the next few years will be in the US.
And when, at a time when the government is saying, listen, we need to build, parts of the government are saying we need to build. I mean, is this a time where you're seeing a lot of opportunity for your fund to get into those public-private partnerships, like as we were talking about before, the Port of Miami and the courthouse in Long Beach?
Yes, in particular, yes. What we're seeing is the federal government is moving away from raising taxes and allocating money back to the states. So the states are now struggling with how to finance infrastructure, increasingly turning to the private sector, trying to get a developer to be responsible not only for the development and construction cycle, but also to make sure that that school building, courthouse, or bridge that you built is adequately maintained and operated over a 35 to 50-year period.
So Lex, let me ask you this. Is it different trying to get a company, trying to throw a company on your back and lead it into a new economy? Is it different when you make stuff versus when you're managing ideas and intellectual property?
We don't make stuff.
I know you don't make stuff. That's why I'm asking.
So I have no idea what it's like to make. You'd have to ask. I mean, I have no idea what it's like to make stuff. God help me. God help us if we.
You've got that assimilation of information thing going, right? I mean, that's what you do. You take this information, you.
Look,
commoditize it.
I don't think we make things.
Yeah.
I think we come up with ideas. I think we listen to our customers. I think we do the same old things that we've done for 30-odd years, relatively successfully. And we keep rolling it out and sticking to the disciplines and the principles that we've sort of always had. I'd love to tell you that we've evolved in this extraordinary way in our thinking and our thought process and our da-da-da-da-da-da. The reality is actually we're doing the same old thing that we did 30 years ago. We just apply the, no, seriously. We apply
I believe
the
you. Speaking of my
principles
microphone,
and the disciplines to different geographies, different asset classes, different markets, verticals, whatever it is. And that is, we collect data and we try and make as much of it proprietary data as possible. We write news, we build some software and some analytics, we package it. We have an awesome sales force that then goes and harasses everybody until they buy. And so far, so good. It seems to have worked. It's sort of okay.
Seems to me, though, that doing the same old thing for 30 years is necessarily a finite experiment.
We just keep plugging it. There's lots of new markets and verticals to go for. I mean, nothing changes. In other words, it just keeps working. It's working staggeringly well. Even today, by the way, I wouldn't want to tell you the figures. We're a private company. There is a reason for that. But I will tell you it is working incredibly well in one of the most worrying times that we've seen in the history of our business, and particularly in one of the most uncertain times for our customers.
Right,
I mean, you cannot believe this is UBS and Morgan Stanley and Credit Suisse are going, this is the greatest time we've ever had. We keep selling them terminals.
So let's turn to the guy to your left and say, Detroit did things the same old way for a whole lot longer than 30 years, and look what happened there. Right? I mean, is this idea of we've got it, it's working, let's keep on plugging a way forward?
Well, I think
Bloomberg has said.
Yeah, I think Lex has been a bit modest. I suspect if you looked at a Bloomberg screen now relative to 30 years ago, it might look a little bit different. But in his case, and it's true in a lot of innovation, people think about innovation as well. Whole new product, a whole new category. 90% of innovation is incremental improvements that over a period of time sum up to something extremely important.
That's an important point. Say that again. Incremental improvements. You don't have to reinvent the wheel every time.
No, you don't have to go from a Bloomberg screen to something totally different. You're going from, in this case, information delivery and Bloomberg, sorry, I'm just using your example, it continues to redefine the markets and ways in which it presents information and the quality of that information and the speed of it. In General Motors' case, yes, it fell asleep at the switch. It didn't innovate at all, or innovated, in this case, a lot more slowly than its competitors. Now you're seeing the rate of pace of innovation there is extremely significant. But a lot of it is a better drivetrain, a lighter car for better fuel economy. A lot of it you don't see. But drive a car from 30 years ago compared to one now, they are fundamentally different experiences. But it all happened one little innovation at a time.
Joe Aiello, a bridge is a bridge is a bridge, right?
Bridge is a bridge is a bridge. One can say that, but if you find yourself in a competitive process trying to win a long-term public assignment, you mentioned the Port of Miami Tunnel as an example. Our goal is to try to figure out how to drive that cost down precipitously. So little things that we have to look at as an example, if I can keep a tunnel boring machine going incrementally a few more feet as opposed to doing open trench construction, I can do that at a marginal cost basis, much lower than what the public had advertised and my competitors are doing it. I have a cost advantage. So at the project level, we're constantly innovating to try to make sure we beat the competition. And at a fund level, we're constantly trying to offer different products to potential investors to provide them different avenues on liquidity, risk profile, et cetera.
Let me stay with you for a second and follow up with a question about how you, from the top down, convince people that this innovation, whether it's incremental or whole scale, is critical to survival. I mean, I get that you're in a fund management business and not actually out at the site, but you talk to the people who are using the boring machines. I mean, how do you convince them? What do you do?
It's not easy. I'll give you an example. We first went to market in 2005, 2006 with no track record, basically a bunch of us from the infrastructure business, and shut off fundraising because we were worried that there wasn't enough product to invest in. This time around, we're probably one of the best track records of all the infrastructure funds in the world over the last 5 years. Significantly more difficult. The level of due diligence that people want to engage in before they invest in the fund has really gone through the roof. You've got to be able to understand what you're doing at every level. The ability to attract top flight contractors and designers, the ability to work with long-term operators, the ability to provide financial solutions. We've had to build a staff that has that subject matter expertise and baked within it, and the investors want to see them, kick them, touch them, but it's really at that granular level that you convince them that you're the right folks for their investment.
Chris, same basic question to you. I mean, how do you, from the top down, inculcate this value of we need to do better, smarter, faster?
Well, it comes back to the third point that I made about being an adaptive organization and stressing that. But in the case of both Microsoft and General Motors, it's fairly obvious from the marketplace. I mean, one of Bill Gates's expressions were, we are our biggest competitor internally, and Windows, or most software has a life cycle of 5 years or less. So, and it's evident to most people that it's going to disappear. So, we're on Windows 8 coming up. So, the fact that the product cadence is obvious, and the fact that there's going to be a natural dissipation of the value of the product is sort of evident to everyone who works inside the company. A little less so in the automobile industry, but it had a death experience last year. So again, you don't need to reinforce to most people that the external market is changing and we need to change with it.
How do you know you're getting it right, Lex?
Because you sell or you don't.
You're making money or you're not?
Well, you're not making. Look, you build something, a new product. You evolve into a different vertical, and you either start selling or you don't start selling. It takes time to start selling. It takes time to engage new customers and to get it right. Most of the time, you come up with ideas in an ivory tower. I love, by the way, what you said about...
Go ahead, go to town, whatever you want.
What I love is, one of the great mistakes lots of companies make, and I will say, I think Bloomberg, we are making it, we try to change it, is to bring all of the talent and all of the management into the central office, to the head office, which in our case is New York. Everybody goes, well, she's a really talented person, great ideas. Let's bring them to New York, and then, we'll surround them with managers and process, and what? And, and that'll be the end of them. God forbid the guy in Hong Kong he'll go too crazy, do some weird stuff, and that will be the death of an sort of lecture. And you've got to let the Hong Kong office do strange things that Americans wouldn't do. You've got to let the London office do different things to the Hong Kong office, and da-da-da-da-da-da-da. Right. I just love that, because I think that is one of our biggest problems. I think it's a many, many big companies' problem. They believe head office is right. And they believe that the managers are right. And how could this small person in Hong Kong be smarter than us or have an idea? And why the hell should we support that? Because they surround themselves with all of these management strategy experts who go, no, you got to do it our way. We're head office, and you got to do it this way. And that's a little bit what's happening to Bloomberg. And I think that, God forbid I criticize my own company, but it's okay to criticize, because that's what makes it. We criticize our own company the whole time. We have these really passionate debates about what we're doing wrong, which I think, of course, makes us a great company, because we all sit there and shout at each other about, we should do this.
All right, so hold on a minute. So let's explore this pushing talent out thing, and here comes the put up or shut up part of the segment. How are you going to do that? How are you going to do it?
It's not a question of how you do it. It's clearly, on the face of it, it is an easy thing to do. The trouble is that you've got the managers in New York, the people running the business, have got to be brave enough and have the confidence in the management and the structure and the people in the diverse offices, of which we have 126, to let them do things a little bit differently. A lot of people will tell you that's wrong. You should set a strategy, you should set a process, you should have everybody follow it in the same way, da-da-da-da-da-da. I don't happen to believe that. I happen to believe exactly the opposite, which I think was your point.
Yeah.
I think you have to let, and I thought a little bit of this panel was about globalization, so I prepared all of these sort of comments about globalization. You gotta be, this awful expression, which is probably not a very good one, you gotta be French in France. And more to the point, in Asia, you've got to be Chinese in China. You've probably got to try and have Chinese people doing it, not Americans or British or Australians. You've got to have Chinese people doing it. The same thing in Thailand, same thing in Singapore. That may not be absolute, but predominantly. You've got to make sure that the people running the office are Hong Kong people, not some white guy from London. And you've got to let them do it differently, because the reality is that whatever we think about globalization, every bit of the world is a little bit differently. And people in England do things differently than people in America, and people in America do things differently. People speak the same language, about as close as it gets, but big differences. And you're better off selling British people. I don't want to be inflammatory or racist or anything else, but you're better off selling British people with British people. You're probably better off selling Americans with American people. You're better off selling people in Hong Kong with people from Hong Kong. So
how'd you get
now I'll get killed. And
how did you get your job? Where are you from? Sorry, just kidding. That idea that Lex was talking about earlier of it takes time to develop a product, it takes time to sell. Seems to me one thing we don't have in this global economy is time. You got to make the numbers now. You got to hit the profit. Things are moving so quickly. How do you instill the value of patience as you try to get companies moving?
I think that you just run the company that way. And again, I think Bill Gates and Steve Ballmer, they did some things wrong, but one thing they did right was they ran the company for the long term. They don't worry about the quarterly results.
Yeah.
And they just say, well, if you don't like it, don't be a shareholder. And that's the way they've run the company for 30 years. But can I just pick up on a point on Lex, because I think it's important. You said, how do you do that in a company? You know, ask most companies, and again, I'm talking more large companies than small domestically based ones. Assuming you live in a global market, ask people what percentage of your opportunity over the next 10 years is outside North America. Let's just say 75% for the sake of discussion. For most, it's probably more than that, but it's at least 75%. Say, who are your top 100 employees? And are 75 of them living outside the US? The answer will be 10 of them. 10 of your top 100 employees in terms of talent will probably live outside the country. So there's an unbelievable mismatch. And obviously you can't be successful, as Lex was alluding to, you can't be successful in Brazil if that's your biggest opportunity, if the guys who run Brazil are sitting in New York or Detroit or wherever. So there has to be a fundamental shift in the way that we think about resource allocation and talent allocation. And in doing that, you have to let go in a way that we haven't run large companies in the past.
Yeah, I would say even from a small business platform where you're trying to get big, we ascribe to that same exact theory. We've got 30 people, 4 offices, Paris, London, Toronto, New York. Not a big spread, but for a small number of people. And if you look at our staff, we have 12 nationalities. And furthermore, we're recruiting, just recruited a couple of Turkish engineers from Stanford University because we see that in our next fund as an important market. We've recruited a couple of folks from China and Hong Kong out of Harvard. Again, they're interning with us because, again, we look at that as our next fund. So you've got to be thinking about this fundamental global but local nature. Centralize a few things like relationships with banks, as an example, that have global footprint. But other than that, really you've got to be out in that market.
Let me get your take on this idea of patience, just to close that out. You as an investor, right, how do you have patience? I mean...
It's a function of how you design the fund, and I think it's self-determination. We went out with a family of 25-year funds, so people who want to be in a fund for a very, very long-term period, with really the first test of whether that fund's performance is hitting the right marks, not till year 7. So it wasn't a market for everybody to invest in. It's self-limiting on the one hand. On the other hand, we were looking for patient investors who were looking for very long-term returns. So we defined what we wanted in terms of patience, and we're able to attract the investors and able to do that.
Lex, biggest mistake you ever made that you thought was a great idea at the time?
Very hard to think of any. There's so many. I don't have a biggest.
How about a category, a vague sensibility?
I'd rather not publicize, the really big ones. This is all, no, I don't want to do that. Look, I will tell you.
Well, let me ask you, how do you avoid making the mistakes then?
You can't avoid making mistakes, and the minute you avoid making mistakes and you think about avoid making mistakes, I would argue you're in really big trouble. You want to make mistakes. You just don't want to make mistakes that kill your company completely. In other words, you want to make small little mistakes that, at the end of the day, what the hell? I mean, how much is it going to cost? What's going to go wrong, et cetera, et cetera. But if you are not making mistakes as a human being, if you are not making mistakes as a company, I would argue you've got a really, really, really big problem and you should go back to the drawing board. I try to make mistakes the whole time and will continue to.
Chris Liddell, what's your tolerance level as a very senior executive in a very large global company for people making mistakes in the name of thinking they were doing the right thing?
I think it's fine as long as they learn something from it. And, someone who makes one mistake, fine. Someone who makes the same mistake 2 or 3 times, then you've got an issue. But you have to experiment, stating the obvious. And as long as people are doing it with the right intent, and it's fine.
Joe, basically agree? Thoughts?
Same with us. The only sin is to avoid risk management process. But go out and innovate, but just make sure you're coming back, telling us what you're doing, et cetera. Mistakes are forgiven as long as you stay within that reporting process.
Okay. The UBS mistake was probably a mistake.
2.3 billion and counting last time I read the papers. All right, so we'll open it up here in just a little bit to get some questions from the floor. So we'll go around one more time with me, and then we'll see what you guys have to say. Are you going to change anything in the way you run your company or companies as this economy eventually gets back on its feet? I mean, you're doing pretty well now. Seems to me you don't want to mess around.
I stick to what I said at the outset, as I think you have principles and disciplines that we will basically always stick to because they've served us very well. That does not mean to say we don't try new things. It does not mean to say that we don't innovate and evolve and all of those things, but there's some basic key principles and disciplines, certainly that we have as an organization, that we will continue to stick to, or I certainly hope we do. I think you should try lots of new things, most of which will not work out, which I guess is another one saying innovation. And you've just got to keep trying things, sticking to the principles and to the disciplines. And, look, I think whatever the market, wherever in the world is good or bad, I think we have phenomenal opportunities to do that. We are lucky. When we go to China, we don't have to set up plant. We don't even really need a presence. We are an online service. We've talked about why we shouldn't operate everything out of New York, but in theory, you could run China out of New York. I mean, you need people up at a different time and in the middle of the night, and hopefully people, and by the way, we are predominantly an English-speaking service. Right. I mean, almost exclusively an English-speaking service, because most of the people in our business speak English and have to speak English for the time being.
Chris Liddell, the big company perspective, how do you make that transition and keep your company at the top of its innovation game as whatever this recovery is going to look like starts?
Well, I think the first thing to say is I don't think you should ever run a company based on the business cycle. That's, especially if it's a long gestation-based company. And yet we observe it every time. I had a principle at General Motors where every time there was a downturn, the company cut back on R&D. Wrong. Because not only was it the wrong thing to do, it was illogical. The car industry is incredibly predictable in terms of cycles. Economic cycle expands, people buy more cars, it contracts, people buy less cars. And it happens every 3 to 5 years or so, the business cycle, plus or minus a little bit, which happens to be about the time that it takes to develop a car. So business cycle goes down, cut back on your R&D, cut back on your product innovation, therefore you don't have the cars to deliver when the product cycle picks back up again. It was the world's worst way of running an engineering system. Plus you had engineers launch a whole lot of projects, whoops, cut back on them, expand on them. You can't run a large-scale engineering organization, in the case of GM, something like 15,000 people, when you're doing this concertinaing of resource allocation. So the first and fundamental thing is forget about the business cycle in terms of resource allocation in the fundamental principles, the things that are really important in the engine room. So how would I run the GM? I don't work there anymore, but if I did, how would I run it in the expanding business cycle? No different from how I'd be running it today.
Joe, thoughts on the investment perspective?
I think the challenge that we're facing right now is, we've got these long-term concessions, so we're guaranteeing a government we're going to operate a hospital or a school building as new for 35 to 50 years. We've told our investors to come into the fund, they'll get stable returns for 25 years. We're trying to align the incentives of the employees, again, given reasonable mortality, that their compensation is based on the long-term performance of these assets as well.